Hello everyone, good afternoon. So we are here for the second session that will focus now on scale-ups. So we will present you scale-ups that will pitch again 5 minutes, and then there will be 5 minutes Q&A for the public to ask any question you would have. Let me introduce you to the members of the jury for this year. Sebastien DOYEN is director at Digital Attraxion. Stan JEANTY is associate at VoltaVentures. Antoine KUYPERS is investment analyst at Finance.Brussels. We have MEERS from EuroQuity Belgium, EuroQuity Belgium manager at Sowalfin, and Gauthier van der Helst, investment partner at Scale Fund. Welcome to all of you. Yeah, and myself, Selin, CEO and co-founder of Polaris. Yeah, so as mentioned, the session for this afternoon will be divided in two. So first, you will have the first part will include a presentation for our last year winner from Ethereum, the Winner Startup Award 2021 from Pascal. Hello. And after that, you will have the pitch from 5 Degrees New, Aividens, DIVIZEND, Oper Credits, and SLVRCLD. Welcome to all of you.
Good afternoon, everyone. The mic on? Yes, good afternoon. So actually, last year it was my colleague Pascal, as you said, Selin, doing the show. Today, it's me, Luc Morand, doing the, basically the assessment of what happened or did not happen. So liabilities are all mine. No, what I thought I would do over the next 5-7 minutes is talk a bit about the good news, but that's a bit auto-congratulation, but I think more relevant, shared the kind of stuff we have been struggling with, which I believe could be useful to everyone. So in Ethereum, what we do is that we are a financial crime compliance software developer, so we basically help essentially banks fight terrorist financing. So, I mean, you could think of us in the context of Russia, for instance. So we won last year. What happened on the good news? Number one, we raised funds, always important from a startup perspective, and we decided to raise funds from individuals on purpose because we believe we are in a long-term kind of business and we need this long-term perspective, which is more in line with what we could get from individual investors. And that's a bit the privilege of age. It's easier for us to get that money too. So one is funds. Two is basically clients. Of course, that's also quite important. We signed a couple of very big partnerships, global partnerships, and we also signed some direct clients of high names, such as Binance, for instance, which to us was very, very, very important. And then, of course, in terms of good news as well, important for a startup, we grew in terms of headcount. We were 8 when we won last year. At this stage, we are 15. Enough for the good news. What have we been struggling with? I think there are essentially 4 points that we have been struggling with, which I think are relevant to everyone. Number one, time to revenue. We are in a software, B2B business. Every contract takes a lot of time. So very important in your business cases to anticipate that things are not going to be easy. So when you believe you have been stretching your pessimistic assumptions, stretch them again, because the likelihood is that this is really going to take quite some time. It also means that you need to manage your cash very smartly. So avoid spending in useless kind of stuff, and also think of how you price your clients. We systematically charge our clients ahead of delivering the services, for instance. That really helps from a cash flow perspective. And then still on the discussion of contract, lawyers are very important. And you have 2 categories of lawyers. Those that want things to be perfect, and those that want deals to be done. It makes a huge difference, not only in terms of fees that you pay them, but in terms of the speed at which the contracts get signed. So keep that in mind as well. Contracts take a lot of time, and lawyers are very, very important. Number 2, product quality. It is not a sort of cliché. You are not going to win by having a product which is as good as others. You really need a product which is much, much better. Inertia in the market is huge, and in many, many cases, your prospects will have a solution already. If you want to displace an existing solution, you need to fight this inertia and have product features which are ideally 10 times better than what they have today. So really, this product quality is essential. Third one, distribution strategy. As any startup, we dream of having the biggest clients in a direct relationship. And of course, that should be the goal of every startup. But at the same time, indirect distribution can give you quite a lot of mileage as well. So what we did is that basically we did a mix of indirect, i.e. partnership strategy and direct sales. And of course, you could think of partnership as saying, okay, so I'm going to give away part of my revenues. But honestly, I'd rather get a smaller percentage of a much bigger pie than the full percentage of a smaller pie. So distribution partnerships can really help you get into the market, get your names known, and that's going to make your direct sales effort much, much more easy to conclude. And the last one is on branding and brand building. For any startup, and maybe even worse for us, because our ambition is really the global market, building your brand is kind of time-consuming activity, and you need to start day one. And it really takes discipline in the company, everyone getting involved and contributing to social media posts and all this kind of stuff, because you just can't wait building your brand. So it really is an investment of the whole company. So really keep in mind those 4 challenges. Don't be too optimistic in terms of time to revenue. It's likely that it's going to be more challenging. Distribution strategy is key, and be open to any kind of distribution strategy. Get the products which is better than anything else you could think of, and invest in your brand building as early as possible. And with this, I wish you good luck in the contest, and hopefully even better, good luck in the success of your ventures. Thank you very much.
Thank you very much, Luc. So I would like to welcome the founder, Maurits van Schooneveld, van 5 Degrees Neo here. Hello, I give you that to present your slide.
Hello, yeah. Thank you all for having us here, me. My name is Maurits. I'm the head of business development. I wish I was the founder. I'm only the head of business development of NEO. So what's NEO? NEO is a cloud-native core banking platform, a B2B SaaS platform that we started building 2 or 3 years ago, all from scratch. We currently have a growing customer base, 3 signed clients at this moment, and we are looking at expanding this at a rapid scale. The business was founded by seasoned business professionals, all with more a background in banking rather than a background in IT and software development. So we like to say that our platform is built by bankers for bankers. So what is it? It is a SaaS cloud-native core banking platform with a lending and an accounts engine. I will dive further into the propositions that we support later. On top of that, we've built a customer data management layer and a payment gateway to process incoming and outgoing payment messages. As we think that core banking is what we do best, we have deliberately decided to invest in an ecosystem surrounding that. I've heard it multiple times already today. If you're good at one thing, don't try to be good at everything, because there are parties that are much better in KYC, onboarding, credit risk decisioning, but also regulatory reporting. So we're actively building out that ecosystem right now. We're about 70 FTEs, of which 80% is in product development. Maybe you know 5 Degrees because we were founded in 2010, when we built the first digital bank in Europe called KNAP, which is bank in reverse. We did that for 10 years quite successfully. But it was a on-premise solution-oriented platform which allowed for customization, and that's exactly what we do not want in the NEO platform. It's a standardized, scalable, transparent, and most of all, a configurable platform. 3 signed clients, Swiss Fund, Brand New Day, and Franks, all from the Netherlands. And what did we embrace while building Neo? That's truly what we call our cloud native principles. We are Azure first, Azure native, so that means we use and reuse all kinds of tooling offered by Microsoft. Why do we do that? We don't think that our R&D department can outperform Microsoft. Other advantages that come with the cloud are high availability, automatic scaling, and of course encrypted data. But our full platform is built as a microservices-based architecture, RESTful APIs, and we have one single code base that we deploy to all our customers. That means you cannot do any customizations in our platform. That is to guide and guard the scalability of the platform. For sake of time, I'll quickly continue. So what is Neo? As I said, 4 product modules. Neo 360 is the customer data management layer. Then we have an accounts layer and a lending layer module supported by Neo Payment Gateway. And surrounding that is the API-based ecosystem. Not going through all of this, but these are the propositions that we support at this moment. I'd like to dive into the lending engine and the accounts engine because that's most interesting and relevant. We support at this moment regular term loans, working capital financing, bridging loans, revolving credits, and some secured loans. And on the accounts part, we support savings accounts, term deposits, FX contracts, and subledger accounts. Our payment gateway supports SEPA and SWIFT payment messages. So yeah, that's in Europe and globally with some exclusions really relevant. Why is our platform the platform to buy as a bank? We have 3 main themes. That is great experience for everyone, banking grade, I'll explain that, and data control. We built the whole platform even though it is a B2B SaaS platform with the end user in mind. It should be a platform that is nice and fun to work with. Banking grade meaning all the day count times, roll over types, interest calculation structures that you would expect in a bank are covered by the platform. And most important of all is control of your data. So our data model is easily extendable with custom fields. Everything can be called via API. And I really have to stop now. Thank you. If you'd like to know more about Neo from 5 Degrees, please feel free to ask now or reach out to me later.
Thank you, Maurits. We have now 5 minutes for Q&A, so if you have any question, please feel free to shoot. Yeah.
Hey, I'm Anne from EuroQuity. Can you talk a little bit, so your customers would be the banks then? What is your potential market size? How big can you go and how fast can you go?
The total core banking platform market is around 60 billion. Of that, I think 99% is still on an on-premise platform. It's also not the complete market that we try to address. We focus on neobanks, fintechs, SME financing companies, SME lenders that are technology savvy, want to innovate and go fast. If you look at the total cloud native core banking market today is around 1 billion. And the total market size is 60 billion. So there's a lot to win still. What we see now is that the early adapters, the early movers have moved. So you can think of N26, Solaris Bank, and a couple of other players. But the vast majority is still using either in-house built legacy platforms or just outdated legacy platforms. I think that is the niche where we, with 5 Degrees Neo, as a cloud native scalable platform, want to dive in and where we can help.
Okay, thank you.
Hi, thanks, great pitch. Maybe a more generic question. What are the biggest challenges you see considering the circumstances of the market today?
From an investment perspective?
Or as a business perspective?
What we see in the market today is, well, the whole principle of cloud has been embraced. So that's not an issue anymore. That was the biggest issue before. Right now, what is a big challenge for us is the core, your core platform, is, as it says, it is your core. So I like to compare it to open heart surgery. Banks don't like to touch their core. So with all the respect, replacing your KYC solution is different than replacing your core bank. So yeah, talking with banks and fintechs about implementing and changing their core platform is what they are often hesitant to do, as it touches upon all their relevant revenue streams, data streams, everything.
Okay, thanks.
Thank you very much. Just related to this topics that you just raised, maybe you can tell us a bit more about your go-to-market strategy, because it should be really hard to convince bank to offer their core business. So I would be really interested to understand how do you reach them?
Yeah, so that's
convince
true.
them.
So we started with our target client right now is a tech-savvy neobank / SME financing companies that really embrace new technology. We feel that we first need to be successful in our home market, which is the Netherlands, but we consider the Benelux to be our home market. Once we get those first launching customers, happy customers, being ambassadors of our platform, I see the success of our company to be like an oil stain that gradually expands. We are consistently investing in the product or the functional coverage of the platform. So we also not aim to be the platform supplier of ING Bank now. That is something that needs to grow. So we start with the smaller companies, and then hopefully, while we have more clients, paying clients, we can also reinvest those proceeds and build out the platform and scale.
You had a question.
No, you said that your main target group is the neobanks, but most neobanks don't acquire a banking license. That's why a lot of them work with a partner bank or with a banking as a service. Are you also in that space that you come with a banking license yourself, and if not, why not? And is that an ambition?
Yeah, that's true. That's true. So for neobanks, that is definitely the case. That's why we are also working with partners that hold such a license. But besides neobanks, we're also looking at, say, more legacy banking operations, but not tier 1s, like tier 3 to tier 6, and those kind of institutions. At this moment, we do not hold such a license. Might be something for the future. It's not a deliberate choice to not do it.
Awesome. Yeah. Thank you very much.
Thank you.
Thank you. Oh, thank you. I would like to invite Simon from Aividens on stage. Simon? Oh, sorry, I had Simon, but it's Ophelie. Yeah?
Micro is on, though.
Yeah, now
you
it's
can
on.
hear me. So where should I stand? Is this okay? Oh, thanks. You tell me when the chrono starts. Oh, thanks. Hi, everyone. Happy to be here. I'll start with a question for you. According to you, what is the current inflation rate we are having in Belgium? 11.7? Okay. I had 11.2 yesterday, but 11.7 might be, in any case. 11.2 or 7 inflation rates, that means higher credit risk and more liquidity challenges for your own company, for your suppliers, for your buyers, which can lead to late payment issues, right? So now let's imagine that your customers pay you with 40 to 80 days delay, which is unfortunately a reality for a lot of companies. This means you are giving those customers free discounts, right? So that's a discount you gave out of your control, out of your will, not comfortable. This is a concern when we know that 25% of bankruptcies are due to late payment issues, and that 2% of companies' annual revenue gets lost in unpaid invoices. And the surprising thing is, while cash becomes more expensive, the same order-to-cash processes have been in place for decades. And that's where we, Aividens, want to add some innovation by adding predictive data into the equation. So we've developed a SaaS solution based on artificial intelligence that predicts customer payment patterns. And the purpose is to manage risk and unpaid invoices before they even occur. Because as we know, the longer you wait to get your bills paid, the more difficult it gets to recover your money. So, what do we do and how does it work concretely? Well, step one, we process a company's transactional data via their ERP. And with that historical data, we enrich data from external sources, credit rating agencies, media, press release, market info, any info that can give us some indications about a company's risk profile. We will simulate different collection strategies according to your objectives. So whether it is to maximize liquidity or minimize credit risk, and we will apply the collection strategy that provides you the highest results. You end up with a 360-degree full view of financial data, financial predictive information. We guide you through the payment patterns, and we help you step by step to target the receivables that will leverage the most for you. Which customers you should contact, what channel, what type of messaging, everything to make your working capital optimized. So this is the kind of predictions we can show you, cash gap predictions, alerts that you are giving daily by the system, and the agenda of the collector. Because our solution is aimed at CFOs and credit managers to provide them with the predictive data they cannot see today but do need to take the strategic decisions of tomorrow. But it's also aimed at credit collectors, because it's difficult to recruit new team, and we see that that's the alternative that a lot of companies have, to go and hire more team because they are not coping with the mass of invoices. But actually, we help you to prioritize your team's effort on added value activities. So really, where is the money lying, and what should you do to grow your business? So what can our customers get out of it? Well, a reduction in overdues, of course, 30% on average, 20% of improved operational efficiency, as I said, make your team more efficient, more focused, and an improved cash accuracy. The type of clients we have is very variable. We serve as well B2B as B2C companies from various industries that have a high volume of invoices and a high volume of clients. So as you can see, this is some of our customers' references. And yeah, why should you trust us? Because we work with partners such as SAP, Micropole, Delaware, that help us to grow on the market, US and EU markets. Our data is fully safe. We are 100% cloud-based. And well, we are now establishing our solution in more than 50 countries by end of this year. So if you have any questions, because I see it's over, my time is off. My name is Ophelie, and I'll be more than happy to answer your questions. Thanks.
Thank you, Ophelie. Jury members, do you have any question? Yeah.
Hi, thanks for the pitch, great pitch. I get the focus on the predictive part, but are you also suggesting solutions to get the cash back to the company or sooner, or is it mainly the predictive part?
Yeah, that's a good question. We do both. So we do the predictive and insights part. That's really what we provide, I would say, as a market advantage, that we can leverage a lot of information and data that is very useful for you to know how to handle with your customers. But we also do the transactional data, the transactional part. So our solution is also executional, meaning that if the company does not have an automated process yet, we can fully operate on that as well. So as you see, there was the agenda, and this shows you daily what customers, like list of 10, 20 customers you should on that day start contacting, and what kind of messages or channels they are sensitive to. For example, we can tell you that there's an orange zone that is a zone where if you contact them on advance with, let's say, 30 days on advance of the sending of the invoices or the due date, then they will be sensitive and react. While some other customers will not be sensitive, we tell you that as well. Don't put too many efforts on that. So it's really both. But a lot of companies already have that tool in place, the transactional tool. For those companies, we can only do the insight as well. That's okay.
Okay, thanks.
Thank you very much. It's really interesting. How long does it take to the software to learn from the customer behaviors? Because I assume with the time we are facing today, the customer's behavior will change. How fast can your model train those data?
Mm-hmm. What we ask when we start with a customer is to have access to the historical data, ideally 3 to 5 years. If we have those 3 to 5 years transactional data, then from day one, we can already really provide you with predictions about your customers. If you are coming with a new customers that we don't have yet in our database, we can profile a similar customer and give you a standard, which will give us a benchmark to start with, and then see if machine learning is validating or not the behavior. I don't know if that answers precisely your question, but
yeah.
I wouldn't be able to tell. It depends of how many clients, in what
how many data do you have?
Well, the customers that we serve right now, we have a list of 15 clients, but for some clients like NG, we operate on a massive scope, so it's not going to give you really a detailed answer. But I would be keen to discuss it with the CEO who's right there, and you can have a chat afterwards.
Well, it's a very interesting question, actually, because how does your software would react to black swan events like we see today? Because if I understood it correctly, you're mainly relying on historical data compared to now a situation that is unseen. So how does your software react to such events? Yeah.
So we start with the historical data from the ERP of the company we're serving, but and that's a part of the added value, is that we add the external information from credit rating agencies. We're partnering with CreditSafe, for example, so that's one. And then the machine learning is part of gathering all the info from the market, media releases, press release. So even though it goes very fast, our model goes quite fast as well. That's the algorithm behind that daily triggers different alerts, and we do credit scoring. So whenever a customer group is attaining a threshold of different alerts, if that customer group is concerned, then you will receive a new credit limit suggestion, for example, for that customer group. So that's part of what we do.
Thank you.
You're welcome.
Awesome. Thank you very much, Ophelie.
Okay, thanks.
If you have any question, yeah, I'm sorry, the time is off, and I have to be fair for every startup. So you can, yeah, definitely, please feel free to have a chat afterwards. Thank you. So I would like to welcome this time Simon from DIVIZEND. Yeah, DIVIZEND?
Yes. Hi, everyone.
It's online. Okay.
Okay, unfortunately, I'm not able to share my camera, but should I just start?
Yeah, you can start, Simon. You have 5 minutes.
Okay, okay.
Awesome.
Thank you.
Thank you.
Okay, so hi, everyone. My name is THOBE, and I'm the head of business development at the German wealth tech Fintech DIVIZEND. At DIVIZEND, we help investors maximize their dividend returns. Being investors ourselves, we found us confronted with the pain of receiving dividends on a cross-border basis and being taxed twice, namely on withholding and income tax. And while there are refund opportunities, unfortunately, these are widely missed out due to the procedures being complex, costly, and time-consuming. And of course, non-standardized, paper-based reclaim forms still frustrate many private and professional investors. Building on an intuitive dashboard, our software helps investors to reclaim their taxes by automating the reclaim process of foreign withholding tax on dividends in a novel and user-friendly and price-competitive way. As a result, our customers not only gain competitive advantage, they also save significant amounts of time and money. Our efficient reclaim process can be easily done in 4 steps. After connecting your securities portfolio, you get a clear overview on all your dividend payments and refund opportunities before you go on to set up a claim by just a few further clicks. And last but not least, you submit your application. Our product already shows great traction and has adopted several strong partnerships, as for example with KPMG. Counting in our unique business model as an API-first company, we have near zero customer acquisition costs. We simply go where our customers are. And right now, we see high demand and similar opportunities, since the withholding tax market is a largely untackled $100 billion business opportunity. As you can see on the left side, we are talking about $100 billion in paid withholding tax on cross-border securities per year, of which $20 billion still remain unreclaimed. And as Peter Thiel says, competition is for losers. While there are other existing providers, they demand high fees and only offer legacy software. Essentially, there is no other SaaS company on the market which revolutionizes the withholding tax refund process to be end-user friendly. Regarding our business model, we simplify your tax reclaim for an attractive transaction-based fee of 75% on the reclaimable amount. An example portfolio with an annual dividend of $20,000 is therefore able to generate a customer profit of nearly $2,500 every year. In case of our strategy, we mainly build on 5 distribution channels, which are national and international bank groups, finance portals and magazines, as well as bank and tax software providers. Due to our API approach, we are also the perfect blitzscaler for high and fast leverage in the most important international financial hubs. Right now, we are present in Germany, Switzerland, and Luxembourg, covering European markets, Singapore for Southeast Asia, and we also plan to move to USA and Canada. As you can see in this financial chart, our business model scales like a hockey stick, since we grow as our customers grow. Considering subscription and transaction-based fees, we see revenues of up to €750,000 in 2023. Furthermore, we are fully self-financed and bootstrapped. Being a remote-first company, we have a lean cost structure and a solid 6-digit financial funding from the 2 co-founders. Additionally, we are the winners of several accelerator programs. We also already have a diversified world-class team building on more than 30 years combined startup experience up to unicorn status. And finally, I appreciate your time. Thank you for listening, and please feel free to contact us.
Thank you, Simon. So if any question from the jury members or the public to ask Simon. Your value prop is crystal clear, apparently.
No, I had a question. I don't know if you hear me.
Yes,
yeah.
Clearly.
So it's Gauthier from the jury. I have a question regarding the pricing strategy. How did you define this 17%, which seems to be quite high? How is it compared to the competition?
Yes, so this is actually based on a study that we have done with our first customers and potential customers. And we asked them what would the price range be that they would pay. And this resulted in the 17.5%. So every customer is perfectly happy to pay these. The positive thing is that it's on the reclaimable amount. So even very low amounts, it's always profitable to do the reclaim. And this is what differs from the competition. So the competition mostly has a standard fee because it involves working hours. But since we automated it, we can make this cheap fee.
Okay, thank you.
Okay, thank you very much, Simon. Thank you for the
presentation. Thank you for having us.
Thank you. All right, so I would like now to welcome Geert van KERCKHOVEN van Oper Credit. The floor is yours.
2, 3. Hello. Good afternoon, everybody. My name is Geert van KERCKHOVEN, co-founder and CEO of Oper Credit. And thank you very much for nominating us today to pitch at the European Fintech Pitch Battle. Buying a property, buying a house, and getting a mortgage is probably one of the most impactful financial decisions you take in your life. However, today, the process is still very cumbersome. It involves a lot of paper, it involves branches, and it is overall actually very painful. And where are you going to go tomorrow when there are no banking branches anymore? The mortgage industry really needs to be revamped and is ready for digitization. We believe it is on the frontier that high-trust transactions get fully digitized. However, if you look at the mortgages today, in Europe, 1.2 trillion euros annually gets transacted, and only 5% of that goes digitally. And that's because of a lot of hurdles that banks need to overcome to make that transition from branch-based sales to digital sales. Because it is a total different paradigm. You need to think differently about your distribution, but also you need to think differently about how do you do your processes? Because digital means you get away from paper, you get away from PDF, but you need to think about how do you work with structured data sources through APIs. And it's through these challenges that we with Oper help banks and mortgage brokers. We have developed a software as a service platform that is fully white labeled that banks can use to digitize their distribution, to get to quicker mortgage decisions, to avoid double data entry, and to really help on digital conversion. How do we do that? Well, we developed a set of front-end and back-end. So we help banks with digital-first distribution through our journey builder. Banks can plug this into their e-banking, into their website, and can onboard the client fully digitally. But we also see that for first-time home buyers, it's important to speak to a human. And for that, we have developed a full virtual advisory portal where clients can, in the evening, have a virtual conversation about their mortgage project. And in the back-end, we have our Coca-Cola recipe, as we say, which is our API infrastructure, which basically immediately fetches proof of income, property valuation data, and can give smart data and product advice to clients. So that actually allows us to build crazy, awesome journeys, which are much better than the journeys today, which basically allows a whole gamification of, I'm actually looking on my phone for different properties, and per properties, we can allow you to say, okay, this is affordable to you, yes or no. And in the background, we fetch a lot of data sources, such as here in the Belgian example, it's me, but also use payroll providers to source immediately proof of income to know that each property gets matched to your income. We're doing this pan-European. We've helped Banklair, the third biggest bank in Switzerland, to go from 5% of digital mortgages to 20% mortgages. We've helped BAWAG in Austria setting up a completely new digital distribution channel and are currently doing our first project in the Emirates. But that are not our only clients. We today operate for 14 clients in 6 countries, processing around 2 billion euros in mortgage volume. And how do we make money with these clients? Well, we charge them a software as a service fee, and then we share the gain. So we take a fee per closed digital mortgage. How do we help them? Well, overall, we've proven today that with our product, we can already almost save 30% of the margins by helping banks shift their distribution from analog to digital and still see a huge upside in our economics overall. A bit on our business. So we were founded by 3 mortgage nerds, including myself, in 2019. Today, we're 48 with a decentralized team across Europe. Today, we count 70 nationalities operating out of 22 cities. And we have 2 hubs, one here in Brussels and in Zurich, Switzerland. We've been very fortunate to raise 13.5 million euros with great investors such as Bessemer, ABN AMRO Ventures, Techstars, etc., etc. Why Oper and why us? Well, we have proven that today we can work pan-European on one code base. We have a team that knows the ins and the outs of the mortgage industry and also knows how to run digital processes and can help banks in really crossing that expertise gap. And we do that at a fraction of the cost on a scalable cloud infrastructure. We are today the de facto market leader when it comes to digital mortgages, and we are trying to leverage the European regulations to create one network to offer much better customer journeys. So when you are looking for a dream house or a dream apartment, that the financing is just a very pleasant experience based, of course, within your risk profile. And that's a little bit about us. Very happy to tackle any question.
Thank you, Geert. Any question from the public, the jury members? Yeah.
Thank you for the pitch, great pitch. So maybe because it already looks very successful, what are your next steps and maybe the challenge you're encountering today?
What are our next steps? Well, it's world domination, but first we're going to do European domination. No, I think we want to make much more impact by doing much more volume. So, as I said, we're currently operating in 6 countries. I mean, we are 2 billion. 2 billion is still a mid-sized bank in Belgium, so we want to get that to 20 billion so we can have much more impact. And that's, I think, the key challenge which we want to do. And one of the key product highlights is what I've shown in the prototype, is that today we have an internal project called the PDF-less mortgage. So we want to convince a bank to approve a mortgage loan without checking one single PDF. But the foundations you need for that is you need to have accurate payroll data. You need to have accurate valuation data. So we're building that backend layer. We have that journey. We've tested with clients if they would give consent, etc. But now it's about convincing risk departments to put it live. And that's the day we crack, let's say the day we get that approval and we will put it live, and target is to do that in the next 9 months, then we can scale it across Europe. And if we do that, we will, again, unlock more volume. We will create our market leader position stronger, and that's what we're working on now. And then, of course, sales cycle at banks, etc. But that's what we do by default.
Okay, maybe then just one more question. What about then the competition? Because you are talking about a leader position. What's the competition look like?
Well, today our biggest competitor remains self-built or consulting houses that built it for the banks on top of a generic tool. I think that's where if we today lose, we lose in such a setup. If I look at, let's say, more software as a service competition, actually it is more Anglo-Saxon. And as soon as you have the North Sea, you know, there is this border. We don't see them that much where we operate today.
Great, thanks.
Yeah.
Hi, I love the pitch. I wish my bank was this efficient. One side question, maybe: do you also work together with real estate agencies, or are they not?
No, because we believe in an embedded. We do it always under the license of a bank. Yeah? But we are helping, so Bonclair is one example of them. So we are now helping them to do, let's say, embedded mortgages, to go out to real estate platforms and to offer an embedded experience. Also for BAWAG in Austria, we've done a similar concept where we connect, because today a real estate agent, they might pass a lead, but there's no, it's somebody calls you again. And so we believe in that embedding will be something we'll see more in the future, and we have a solution for that. But again, it's always in that ecosystem that we provide the technology. It's not that we do the distribution ourselves.
Okay, thanks.
Thank you.
Hi, just piggybacking off some of the things that you were saying. When you're talking about growth in Europe, do you also mean the UK?
Yes, it's on the radar. But today, I really have the feeling, I'm very proud of the fact that we have a European company. We are super strong in covering languages, and we're super strong on the continent. And I have always the feeling that UK, which is a little bit more advanced in open banking and open finance, is very difficult for them to come to cross the pond. So I would today our strategy is to, yes, we are in London, yes, we're having talks, but today our core focus remains Central Eastern Europe, DACH, and France, let's say, but that's a separate topic.
Thank you.
Okay. Thank you very
so
much.
Thank you.
Thank you.
Here you go.
Thank you. I would like to invite the last speaker of this first part of the afternoon, Christiaan from SLVRCLD. Sorry. Here you go.
I've got the mic here. Thanks. Can I just get the pointer there? Thank you very much. Hi, everyone. I know it's the last presentation, so I'm going to try and keep it as interesting as possible. My name is Christiaan ERASMUS. I'm the CEO of SilverCloud, and I'm here today to tell you about how we help insurers to speed up their content claims and decrease the total claims cost. And why do we do it besides just the cost saving is the settlement speed of settlement, as well as the process transparency, is one of the largest trust builders that you've got in the whole insurance process. Sorry, this is just falling off. As according to Accenture. And then also 83% of dissatisfied clients leave an insurer or are thinking about leaving an insurer for the year after they had that specific incident. So how are we able to do it? Is firstly, we've developed this large structured item data set, and we did it by analyzing the millions and millions of actual insurance quotes that we had. We enhanced it with external data sources, and with that structured data set, we can help identify the item being claimed for. And then from there, through algorithms and machine learning, we determine the correct replacements, where about 2 out of 3 items have been discontinued. And then once that is done, we instantly price it wherever we can from the panel suppliers in that specific area for the insurer, offering those specific items. And then afterwards, if we can't do it instantaneously, it breaks out into a quick tender process where we've got 30 desktop assessors to oversee that quantification process. We handle it via a tender. And then once the claim has been quantified, it can be settled via the most appropriate method. There's a large saving for the insurers, 20% in South Africa. It is more respectable, half that in the Netherlands as well as in Australia. And then the various settlement methods that we've got is a debit card, either a physical card or tokenized, so clients can pay via Google Pay or Apple Pay. We also then have supplier vouchers where we integrate into the supplier's gift engines and then issue vouchers directly through there. And then lastly is cash in lieu, because sometimes cash is the best suitable settlement mechanism. So the categories where we participate, I always say if you take a house and you turn it upside down, anything that falls out of there that's either got a make or a model or that is of value is where we help the insurers. And the benefits to the clients is transparent. So firstly, it's a very quick and easy process. The client can communicate with the insurer in their channel of choice, being either website, chatbot, app, or telephonically, which is still very rife. Better premiums are offered to the clients at the end of the day, and then the clients get dealt with empathy. So if we look at the benefits to the claims agents, the claims agent can focus on the client and not the process specifically. Less client complaints are received, which leads to higher KPIs and a much higher job satisfaction for those specific claims agents. Then the benefits to the insurers. Firstly, out of a value proposition is it's a very quick implementation, quick process. They don't have to implement. I'll get to the system a bit later. So we also enable the insurer to decrease their premiums. And we had one insurer that actively mentioned to us that was possible to do because we improved their loss ratio by decreasing the total claims cost. You also end up with a happier and more loyal client, higher NPS scores, so they're less likely to leave, which leads to higher growth at the end of the day. And then also sustainability initiatives can be implemented. So insurers are able to have a sustainable panel, or they can offer items that are more efficient. So then if we go there, we are API-first company. Our golden standard is to integrate into the insurer's FNOL, but we understand that that's not always possible, that there's not always development capacity. So we have got a portal that you can see there in the background. So we augment the whole process for the insurer, and we help them to decrease their claims from days down to seconds at the end of the day. Our system is also developed on AWS. We use AWS's serverless technology quite extensively, so it's extremely scalable at the end of the day. So just quickly by the numbers, I'm running out of time there, but just our clients. Thessel being our sister company in South Africa, which is the de facto solution provider there. We are live in 4 countries at the moment, South Africa, and we're piloting in the Netherlands, UK, and Australia. We also just got confirmation yesterday of a Belgian insurer that's going to pilot here. And then just 36 team members, 6 on the development side, 30 desktop assessors. And then that is unfortunately my time that is up. Great. I don't know if there's any questions.
Mm-hmm. If you have one, that's best. Yeah, thank you.
Thank you for your pitch.
Oh, thank you.
It went a little bit quick for me, so maybe can you get back to your solution? What exactly is it doing?
Okay, so if you claim for in this case, a laptop or a television or anything that's in a house that would fall out if you turn it upside down, we help the insurers to identify that item, where we do it through a make and a model. We do it through a barcode. You can just scan the barcode, I'm EI, or their natural language. So you could say 50-inch Samsung television was either damaged or stolen. We help the insurer to identify that specific item and then price it for them at their panel of suppliers.
Okay, so it's after there has been a damage,
yes.
Then it's not upfront where you're making an inventory or helping them?
We also do have that functionality. But most insurers start at the claims process, and then with time, you go to the bringing a client onto policy. Your benefit, if you did do it at the initial stage, is then if there's an incident, you can ask the client, were any of these specific items involved in that incident, and then it just speeds up that process even further. So you could say, was that laptop part of this specific theft or damage? And then we then with 100% accuracy know what item the client had.
Okay, so it's not the end user that has access to the tool?
We always want to go to the end user so that the end user then integrate into the first notification of loss process, so where the client captures the claim. But unfortunately, the insurers don't always have that development capacity or the appetite at that point to roll it out, because then it's fantastic, because that brings down the claim with a factor of multiples, because the claim is quantified before it gets to their fraud models or to the assessor, the claims agent dealing with that claim, and then with a single instance, it can then be finalized. So it's even if you've got the client on the phone, they can determine what the item is, and while the client's on the phone, they can finalize that claim. So it's a one-stop claims process then.
Thank you. Much clearer for me. Thank you.
Thank you. Any other questions?
Maybe I missed it, but how do you make money?
We charge a SaaS fee. So it's based on a per claim basis, and then at the end of the month, we just invoice the insurer. There's also then other fees that can be made depending on how big your volume is, but that's further down the line and also dependent from country to country.
Okay, thank you.
Thanks. Great. Thank you. Bye-bye.
Thanks,
Selin.
Thank you very much.
Cheers.
All right. Awesome. Thank you very much for all the pitch. It was really insightful. I would like to invite you for a quick break, but before that, if you would like to vote for any startup that you've just seen now, please feel free to use the Bizabo app, and you can vote so that your decision can be taken into account. Thank you.